World financial markets continued on from where they left off from yesterday's close, with pessimism about Greece's future in the Eurozone continuing to dominate investors' minds. In terms of local markets, there was also an impact from a World Bank report around expected growth out of the Asia-Pacific region. The World Bank has effectively reduced its expected growth for Asia-Pacific over 2012 and 2013 from 7.8% to 7.6%. The two reasons behind this downgrade are the fact that it's expected that growth out of the European and American markets will be significantly lower due to the weaker economic circumstances, and also because of the significant amount of natural disasters which have affected Asian countries over the last 12 months. In terms of oil, Iran surprisingly capitulated to the UN and has allowed investigators in to investigate their nuclear program. This was quite a relief for investors, and oil actually spiked significantly downwards, falling through the $90 US a barrel mark for US crude. Looking at markets then, in terms of European markets were hit significantly by that pessimism around Greece, falling by more than 2.5% across the board. In the US, however, it was a slightly different story. The Dow was off initially by 140 points, however, it recovered to be almost flat by close. In terms of the currencies, the US and Australia followed the lead from the Dow. The Kiwi was actually significantly down against the US, falling through the 75-cent US barrier. However, by this morning, it had actually recovered to around 75.1 US cents. Recently, the US Department of Agriculture released estimates in terms of US meat production for 2013. According to the USDA, meat production from the US is expected to be higher than 2012. However, when you dig deep into those numbers, it's interesting to note that beef continues its downward slide, and in fact, there will be less production of beef from the US in 2013. This is, however, made up by increased production of poultry and pork. In terms of the reasons behind the continued downward slide for US beef, two things are cited. Firstly, increased feed costs, and secondly, lower cow slaughter, primarily driven by lower amounts of headstock across the country. What this indicates then is also that exports out of the US of meat products, particularly beef, are also going to be down on 2012. So for beef farmers in New Zealand, this represents some good opportunities in terms of Asia and US for 2013.